The topic on creditors reconciliation covers the preparation of accounts payable subsidiary ledgers and the reconciliation of the accounts payable control with the subsidiary ledgers. Prior to this lesson, you have prepared the subsidiary journals for credit transactions. You've drawn up the accounts payable control and properly closed it off in the general ledger. We have captured the source documents affecting creditors into various subsidiary journals and posted totals into the accounts payable control in the general ledger. In this lecture, these source documents will be recorded in the accounts payable subsidiary ledgers, representing a group of separate creditors' accounts. Let us first look at the process to be followed in capturing the source document by incorporating the knowledge we have gained previously. By analyzing the source document, showing the daily recordings at the date of the transaction, and posting of the totals at month end in the accounts payable control in the general ledger. Starting with the original invoice for credit purchases, these were recorded in the accounts payable journal. They will therefore be credited immediately to the accounts payable in the subsidiary ledgers. The original credit note for returns, these were captured in the accounts payable allowances journal. They will therefore be immediately debited in the accounts payable of the subsidiary ledgers. For the check counterfoil for creditors' payments, these were recorded in the cash payment journal. They will therefore be debited in the accounts payable of the subsidiary ledger. The check counterfoil for the discount received on creditors' payments, these were captured in the cash payment journal. They will therefore be debited in the accounts payable of the subsidiary ledger. The journal voucher for interest charged were captured in the general journal. They will therefore be credited to the accounts payable of the subsidiary ledgers. At the end of the month, these journals were closed off and posted to the control account in the general ledger as follows. The control account was credited with total purchases posted from the APJ. The accounts payable control was debited with the total returns posted from the APAJ. The control account was debited with the contra bank for creditors' payments posted from the CPJ. The accounts payable control was debited with the discount received recorded in the cash payment journal. And lastly, the accounts payable control was credited with the interest paid posted from the general journal. These two journals, being the accounts payable journal and the accounts payable allowances journal, were extracted from the previous lecture. In both journals, we have a column for accounts payable. These two at the end of the month were posted into the control account in the general ledger as follows. We open up the accounts payable. Remember that the accounts payable, it's a liability on the accounting equation. Therefore, the opening balance of the accounts payable was shown on the credit side. And then at the end of the month, we posted the accounts payable journal on the credit side as total purchases, posted under folio from the APJ, the total amount as calculated in the accounts payable journal. On the credit side, we reflected the total returns which were posted from the accounts payable allowances journal. In the cash payment journal, we also have a column for accounts payable showing all the checks that were issued to creditors in payment of accounts or in payment of deposits. These total payments were posted into the accounts payable in the general ledger as on the debit side, bank, posted from the CPJ, total amount as calculated in the cash payment journal. At the end of the month, there were source documents omitted from the relevant subsidiary journals. These were captured in the general journal, and the accounts affected were the vehicle account that must be debited with 12,600, SARS VAT that must be debited with 1,890, the accounts payable XPS dealers to be credited with a total amount of 14,490, being an invoice paid for branding the vehicle. The next journal entry is to debit the accounts payable Maxi Traders with an amount of 710. The contra of this entry are the trading inventory which must be credited with 617, the SARS VAT account which must be credited with 93 rand, narration reading as credit note received for defective goods returned. These entries, because they affect accounts payable, they should also be posted in the accounts payable in the general ledger. We will therefore post them as follows. The first journal is to credit the accounts payable with an amount of 14,490. On the credit side, we will show under details the vehicle, folio posted from the general journal, the total amount 14,490 on the credit side as it is shown in the general journal. The next is to debit the accounts payable with an amount of 710. As you can see in the ledger, instead of debiting with 710, we are now closing the general ledger. We will continue to do so without the entry on the debit side of 710. The total of the credit is bigger than the debit side. Therefore, we carry over the total of the credit side to the debit side. We will then balance the debit side by calculating the closing balance, giving us 419,550. This closing balance will be shown on the opposite side as the opening balance for the new month. With this slide, we will start preparing the subsidiary ledgers for creditors. In the accounts payable journal, we received invoices from creditors. On the 2nd, we received invoices from P&A stationers, amount 750 including VAT. The second invoice that we received on the 2nd was from XPS dealers, the total amount including VAT 455,000 rand. We will open up the subsidiary ledger on the 2nd for the two creditors, starting with P&A stationers. The subsidiary ledger will have the following columns: the date, the details, the debit for entries that will reduce creditors, credit for entries that will increase creditors, and the balance column for showing daily and month-end balances. If P&A stationers had an amount owing from the previous month, It will be shown in the new month as the balance brought down. In this case, the opening balance was given as 360. Then we will show the invoice that we received on the 2nd, invoice number 25. The total amount, including VAT on the credit side, 750. Invoices increase creditors accounts. We will calculate the new balance by adding the invoice to the amount that he owed previously, and the new balance will be 1,110. Then we open up the XPS dealer's subsidiary ledger. He didn't have any amount owing from the previous month. Therefore, we will record his invoice on the 2nd as invoice number 26. On the credit side, because it's an invoice, 455,000 rand. The balance owing, 455,000 rand. In the cash payment journal, there were payments that were made to creditors. We therefore have to reflect them according to the date that they were paid. On the 2nd, there's a check which was issued to XPS dealer. The amount 55,000 rand in the bank. Under the accounts payable column, 55,000 rand. We then reflect the amount that is under the accounts payable in the subsidiary ledger for XPS dealer. On the 2nd, we will show the check that has been issued. On the debit side, reflect the payment that was made of 55,000 rand. Calculate the new balance and reflect it on the balance column. In the cash payment journal again, there's a payment under the accounts payable column of 880, which was paid to PNA stationers. Under the bank, 880. The date was the 4th. We go to PA stationers account. On the 4th, we reflect the check that was paid out to him. On the debit side, the total amount according to the accounts payable column, 880. We then calculate the new balance by deducting the payment, and the new balance is now 230. In the accounts payable allowance journal, we recorded a credit note received on the 11th from P&A stationers, and the total amount under the accounts payable column is 230, including VAT. This credit note must be reflected immediately in the subsidiary ledger for P&A stationers. On the 11th, we therefore show the credit note. On the debit side, because it reduces the balance of a creditor, it's reflected as 255 instead of 230 that is calculated as a total in the accounts payable column. We then calculate the new balance by deducting the 255 from 230. It gives us a debit of 25 rand instead of a credit. It does happen that in some cases, you will have a debit balance in the accounts of your creditors as a result of an error or as a result of omissions. In the accounts payable journal, we have already recorded the first two entries. We are now recording the invoice received on the 7th from Maxi Traders, the total amount 3,700. In his account Maxi Traders, he owed us previously an amount of 1,160, which is reflected as the opening balance in his account. On the 7th, we are now recording the invoice that we have received from him. It's an invoice. We are recording it on the credit side. The balance increases to 4,860. And then in the general journal at the end of the month, there was a credit note received for defective goods returned, which was not captured in the allowances journal. We therefore have to record this credit note in the accounts payable for Maxi Traders. This is a credit note. It must be debited in his account. We go to his account at the end of the month, 31st of March. We reflect under details a credit note. On the debit side, an amount of 710. It's not reflected. Instead, the amount is reflected on the credit side at 710. It's a credit note. It was supposed to be debited, but it's now credited. So because it's credited, it gives us the closing balance for Maxi Traders of 5,570. After posting of the journals into the control account in the general ledger has been completed, the accounts payable closed with a balance of 419,550. For the subsidiary ledgers, the account of P&A stationers closed with a debit balance of 25 rand. The account of Maxi Traders closed with a credit balance of 5,570. The account of XPS dealers closed with a credit balance of 400,000. When the three subtotals are added together, they must give us a total similar to the one that was calculated in the accounts payable. But when the three are added together, they give us a total closing balance from the subsidiary ledger of 405,545, which is not similar to the closing balance that was calculated in the accounts payable. We therefore have to investigate the difference. On investigation, the following errors and omissions were discovered. The total purchases were overstated by an amount of 200 rand. The journal entry for an invoice of 14,490 rand was omitted in the list. Number 3, a credit note of 230 rand was recorded as 255 rand in P&A stationer's account. A general journal entry of 710 rand for goods returned was omitted from the control account. This credit note was also credited into Maxi Traders account. You are required to rewrite the accounts payable control in the general ledger to correct the error and to show the reconciliation of the control account with the accounts payable ledger or the list. This is an account payable control that must be rewritten in the general ledger. Thereafter, it should be followed by the preparation of the account payable or the creditor's reconciliation statement at the end of the month. Starting with the total purchases, which were overstated by an amount of 200 rand. Total purchases are usually recorded in the general ledger. We will therefore go to the accounts payable control in the general ledger. On the credit side, on the line for total purchases, which were posted from the APJ, we will reflect the correct entry as 459,450. The second error is the journal entry for an invoice of 14,490, which was omitted in the list. The error is on the subsidiary ledgers. Therefore, we will correct it on the reconciliation statement. The first entry on the reconciliation statement will be to bring in the closing balances that were added from the subsidiary ledgers. We calculated the total closing balance of creditors as an amount of 405,545 rand, which must be shown on the credit side of the reconciliation statement. Thereafter, we will reflect the invoice which was omitted on the credit side and the amount 14,490. Line number 3, a credit note of 230 Rand was recorded as 255 Rand in P&A Stationers account. The error is in the creditor's personal account or in the subsidiary ledgers. Therefore, it will be corrected on the reconciliation statement. The debit note was entered correctly on the debit side, but the amount was overstated. To correct the overstated amount, we will reflect the correction on the credit side. We will therefore show the entry as a credit note overstated, and the overstated amount will be reflected on the credit side as 25 rands. Entry number 4, it's a general journal of 710 Rand for goods returned, which was omitted from the control account. We will go to the debit side of the general ledger, show the entry because it comes from the general journal as trading inventory, the folio general journal, the total amount 710 rands. This is a credit note which was also credited into Max's traders account. This credit in Max's traders account was in error because credit notes are not credited but debited. To correct the amount, the entry will be duplicated on the debit side. The first debit entry is the cancellation of the credit error that was made. The second entry will be to bring the credit note into the books. We will therefore show the entries on the reconciliation as follows. The first entry will be to debit amount wrongly credited, and the amount of the credit note was 710. Now this 710 cancels the credit that was made of the same amount. Now this credit note has been cancelled from the books. It's a credit note that must be correctly captured. The second entry will be now to capture the credit note on the debit side. We will therefore debit the credit note on the reconciliation and show it as being a credit note that is brought into the books. And on the debit side, we will show this amount of the credit note, which is 710. When all transaction has been entered into the records, the accounts payable control in the general ledger must be balanced and closed off. We will therefore calculate the total of the credit side as the biggest total. It gives us 475,460. Carry it over to the debit side to close the account. On the debit side, calculate the balancing figure, which will represent the closing balance, and the adjusted total calculated after this reconciliation. It's 418,640, which will be shown on the credit side of the account as the opening balance for the new month, and the amount brought down will be 418,640. Thereafter, close off the reconciliation by balancing it over using the biggest total of the credit side, calculated as 420,060. Carry it over to the debit side of the reconciliation. Calculate the balancing figure, which will represent the closing balance of the accounts payable. We will therefore balance off the reconciliation by showing the balance as per control account in the general ledger and the reconciliation balances with the same amount of 418,640. If you are required to prepare the reconciliation of the accounts payable control with the accounts payable subsidiary ledger without rewriting the accounts payable control in the general ledger, your accounts payable or creditors reconciliation statement at the end of the month will have the following columns: the details columns, the accounts payable subsidiary ledger column, and the accounts payable control column. The first entry will be to reflect the total as calculated at the end of the month. The total that was calculated for the subsidiary ledgers was an amount of 405,545 rands. For the control account, the amount calculated as a closing balance from the ledger was an amount of 419,550 rands, bringing the errors and omissions starting with the total purchases which were overstated by an amount of 200 rand. We said earlier that the error was committed in the control accounts. Therefore, it will be corrected or shown on the bank reconciliation in the column for accounts payable control. It will be shown as debiting the total purchases overstated, and the amount will be shown in bracket or as a negative, indicating that it's a debit entry in the accounts payable. The second omission was the journal entry for an invoice of 14,490, which was omitted in the list. We said that the error was committed in the subsidiary ledger. On the reconciliation, we will show it as a crediting invoice which was omitted. In the column for subsidiary ledger, an entry for 14,490 will be reflected. The third error was a credit note of 230, which was recorded as 255 rands in the PAN stationers account. On the reconciliation, it will be shown as a credit for an overstated credit note. The entry will be shown in the subsidiary ledger as 25 rands. The error was made in the personal creditors account. Therefore, it will be shown in the subsidiary ledger column. Number 4, the credit note of 710 for goods returned was omitted from the control account and credited into Maxi Traders account. We will first start by correcting the omission in the control account. We will therefore show it on the reconciliation as debiting the credit note omitted. In the column for accounts payable control, we will show it in brackets. The next will be to correct the credit note which was credited into Maxi Traders account by duplicating the correction. We will therefore first start by debiting the amount wrongly credited, the entry 710 under the subsidiary ledger, because the error of credit was made in Maxi Traders account. Therefore, this debit cancels the credit error that was made when the entry was recorded. The second entry is to bring the credit note into the records. We will therefore debit the same credit note, now bringing it into the accounting books. When all errors and omissions have been brought into books, the reconciliation will then be closed by calculating the closing balances. Calculating the closing balance for the column of subsidiary ledgers, it gives us a closing balance of 418,640. We do the same thing also with the accounts payable column. We will calculate the closing balance of the control account on the reconciliation. It also gives us a closing balance of 418,640. Therefore, after reconciliation, our accounts are now reconciling.